whole life insurance policy grows over time. These whole life insurance policies usually predict the cash value you are accumulating will grow on average at 4% a year. This seems pretty nice in light of all the other benefits, but it isn't. It's actually a really bad investment, and we're going to get into it right now. Let's start.
Okay, so let's cover that really quick. Again, it's just doesn't make sense. Like calling whole life insurance an investment. It's not an investment. It's a whole life insurance policy. It's comparable to, because it's a safe asset, it's comparable to things like high yield savings accounts, CDs, money markets, bonds, right? You wouldn't really compare like most people have a 60-40 or 70-30 stock and bond portfolio, right? 60% stocks and mutual funds, 40% bonds. All right, what do those bonds usually yield? It's going to be like right now, roughly around like 4 to 5%. Like we'll call it 3 to 5%, whatever. Okay, that's not. You wouldn't call that a bad investment, right? Because it's not an investment; it's a bond. It's a much safe. It's supposed to be, anyways, a much safer asset, and it's designed to balance out the volatility of the stocks and mutual funds inside that portfolio. The stocks and mutual funds, because there's a lot more risk involved. You expect a higher return, right? Well, with safer assets like high yield savings accounts, for example, CDs, there is no market volatility, right? Really the main risk is the institution that you have the money with. Are they going to go belly up and you're going to lose everything? That's really the only risk, though. And it's usually a pretty low risk there. Like you expect zero volatility in a safe asset, and because of that safety. That means that you're not going to get really good returns. It's give and take here. Okay. So it's very similar to whole life insurance. If I were to ask you, because whole life insurance is a safe asset, it has nothing to do with the stock market. So you can't compare it to investments. And the way I like to describe this, kind of an analogy, I guess, is if your bank called you up and said, hey, we have this amazing new savings account. It's going to pay you 4% tax-free compound growth for the rest of your life. And in fact, what we're also going to do is we're going to allow you to use the money in the account for emergencies and other wealth building opportunities without interrupting the growth of that of the money in the account. And on top of that, we're going to provide a massive income tax-free death benefit where the money in the account will 10, 20, 30x multiply into a massive death benefit for your loved ones in case you pass away. Does that sound like a good savings vehicle to you? I think most people would say yes. Most people aren't expecting to get these, 8, 9, 10% rates of return in a savings account or a safe savings vehicle. So why would you expect to get it in a whole life insurance policy? And why would you compare the two? It just doesn't make sense. You don't compare your savings account to your stock portfolio, do you? No, because they're completely different. It's like comparing apples and tater tots, guys. So that's why, be careful with this kind of stuff, man, where they're saying, oh, it's a bad investment. Well, you're right, because it's not an investment. Okay. Just because it's not getting 8 to 10%, like you might get in a stock portfolio, doesn't mean all of a sudden it's terrible, right? We're just comparing it to the wrong things. Let's continue.
Dissecting this and get to the truth behind the lies these salesmen are telling you. Remember, number one, whole life insurance has a lifelong benefit, right? And supposedly this is better than term life insurance that might end at a younger age, like 50. Here's the problem. You pay extra money for whole life insurance to last that long. You pay a lot more. Let's say you're a healthy 30-year-old male non-smoker. You want $1 million life insurance policy that lasts until you're 60. You'll pay $60 a month for that. That's nothing. And it'll cover you in case you die while you're young. It'll help your family get by without you. I guess that's kind of morbid. If you want a whole life policy, also for $1 million, it doesn't end at 60. You get paid when you die, no matter how old. That's nice, right? Yeah, but it's pretty fucking expensive. You'll pay $920 a month. Okay, $60 for term insurance, $920 for whole life. That's 15 times more. These numbers come off the Aflac website. You can Google it yourself. It's totally absurd to pay 15 times more, $920 a month, to have life insurance available if you die past the age of 60. And I'll show you why this is a horrible idea.
Before we get into it, let's talk about the philosophy. Let's break that down, the philosophy around what he's mentioning here. So if you're just talking about death benefit, then he's right. You're with a whole life policy, you're going to pay way more than for the same amount of death benefit than you would with a term policy. But that completely, you're not telling anywhere close to the full story here, because you're not addressing all of the other benefits that you get from a whole life policy. So I'm going to give you a real world example here. Term insurance, you could think of like renting life insurance versus whole life insurance, it's insurance that you own. It's permanent, right? This is very similar to buying or renting a home. So let's take a 3-bedroom, 2-bath home, 1,500 square feet, and you have the option to rent or buy it. Okay, if we're just talking about the space, the space of the home itself, like the living space, then there's I think it's pretty clear that it's much cheaper to rent that house than it is to buy the house. So if that's the case, then why do so many people buy homes? If you could get the same space, the same living space for so much cheaper over the long run, then why are people buying homes? That doesn't make sense. It's so much more expensive to buy a home. You have to save up for the down payment, not to mention the interest you're going to pay over, let's say, a 30-year mortgage. You basically pay for the house twice. Okay, all the taxes, insurance, the maintenance on the property, on the home as well. Like, it's so much more expensive to buy a house. So why are people spending so much more to buy the house, the same exact living space, than if they were to just rent it? Okay, well, why is that, guys? Well, because there's so many more benefits of buying a house versus renting a house. Now, I want to be clear, that doesn't mean everybody should buy a house, just like not everybody should have whole life insurance. Okay, it comes down to your specific situation. I don't own a home right now. I rent my apartment. Because that just makes sense for me. Like, sometimes renting things does make more sense. Okay, but to say that because here's the thing, I eventually I do want to buy land and home and home and all that stuff. Okay, this is not a good fit for me at the moment. All right, but to say that one is just terrible, and you're only addressing one aspect of it, I think, again, is a disservice to people, because you get so many more benefits in this particular case by buying whole life insurance long term. You get so many more long term benefits of that. All right, we discussed some of them, like when you hit retirement and the different ways that it benefits you there. I've talked about this. I mentioned it a little bit earlier, but I talk about it a lot on my channel. It can be a great way to accelerate the wealth building process in your life, because it allows you to build wealth in multiple places at once. You're going to get that safe, 3.5%, 4%, maybe 5% tax-free compound growth for the life of the policy. So you get a safe internal rate of return. You get massive tax advantages. We get safety as well. It's guaranteed to grow. Plus, it gets non-guaranteed dividends. All right, I could borrow against the cash value, so there's that savings aspect to the whole life policy. It's very similar to a home, guys. When you buy the home, it's yours. You can do what you want with it. It's going to appreciate in value over time. It's something that it's an asset that you can sell as well. It's something that you could pass on to your kids. You can get that home equity line of credit as well, and use that for emergencies or other wealth building opportunities. Maybe you use the equity in your home to buy an income producing property, right? And you rent that out, whatever, right? You could pay it off as well. Guys, can you pay off a lease? Like, if you're renting a home, would that ever be paid off, or will you be paying rent forever? Right. You'd be paying rent forever until you can't afford it. Like in the case of term life insurance, when people hit 60, 70 years old, you just can't afford it anymore. So you just don't have life insurance anymore. All right. But you can't pay off the term life policy. You can't pay off the lease on a home or an apartment. Well, guess what you can do on the mortgage when you buy something, when you buy a house? You can pay it off and still own the asset. It's the same thing with whole life insurance, guys. You could pay into it for 10, 20 years, 13 years. Like, it's totally up to you. You can do premium offsets. Like, there's a lot of options to where you get all the benefits of dividend paying whole life insurance, but you don't have to continue paying into it if you don't want to, right? So again, so many more benefits from whole life insurance than just the death benefit. That's my frustration with these types of videos. They're only talking about the death benefit when they're comparing it to term life insurance. And in that situation, you're right. You're going to get way less death benefit for the same amount of money with a whole life policy than you would term, but you're also missing out on all these other benefits as well. So keep that in mind.